Well, welcome to another episode of Insurance Gone Wild. I am your host, Dennis Settlemoir, and our co-host here is
Stephanie Lencioni.
Stephanie Lencioni. We are here again today to talk about the things that matter to the consumer.
Can I just pause for a second?
No.
It just tickles me every time.
No.
I'm like, Stephanie Lencioni, and you're like, Stephanie Lencioni. Every time.
Well, I want to make sure they understand what you're saying because that is a weird last name, almost like Settlemoir. It's weirder than Settlemoir.
I know, but I just think it just tickles me every time. And of course, we've got our adorable reader today, little Vanna White.
Yeah,
Mr.
I'm not sure why
Vanna
you have
White.
to correct her last name. I think she knows how to pronounce her own name.
Good gravy.
It's just, no,
Speaking
anyway.
of the man with the last name.
I know. Yep.
So,
No, it just tickles me every time. I don't mind it. Except I got the eye contact from the husband and was like, what? And I'm like,
what?
this is what I do. Like, I don't know.
This is it. This is it. You know, he's never around whenever we do
We don't spend time
recordings.
together.
Well, that make your marriage last a lot longer, probably.
You should listen to our podcast.
Yes, I should. I should.
No.
I've been on your
it's not.
podcast.
Not technically. We need to re-record.
Oh.
I know. And I asked you and your wife to hop on.
Yeah, she's
didn't-
willing.
Okay.
She's willing.
Well,
She got a
that's
lot going on.
Probably why you married her, eh?
Yeah. Exactly.
Anyway.
Yeah.
But for insurance, yes.
For
For
insurance.
insurance gone wild. Today let's talk about myths. What are the myths of insurance? Don't give her the cigar.
Well, she looks like she needs a good chaw in her.
Okay,
in her-
she's precious.
Yeah, I hear you.
Needs a little haircut, but she's precious.
Insurance myths.
Insurance
Let's go
myths.
back to we're looking at insurance myths.
Yeah, so we're gonna have a list. Mr. Vanna is going to Brianna. Should I call you
Things that we hear.
Mr. Brianna?
You
Things
can use
that
my
we
own.
hear.
Hi,
Things things that people bring up out of the blue because they've heard.
Yep.
Which may or may not be true. So,
True.
It's a myth.
Yeah. May
There
or may
be
not.
some truth to it.
Mythbusters, right? Yeah, that's the thing. There may be
some truth to
an
it.
underlying truth, but not full picture
Yeah.
in the statement. So,
Yeah.
okay, so let's go myth number one.
What's the
Mr.
first one?
Brian.
First one we got here is under general insurance myths. And I'm going to...
Just read the first myth.
Okay. Insurance is a waste of money if you never use it. Why
Correct.
coverage is about protection, not just immediate benefits.
What?
That is correct.
What was that second part?
Insurance is
Yeah.
a waste of money if you never use it.
Well, no. And okay, are we going to have a little debate? This is fantastic.
Right?
But it's a peace of mind.
And then there is no price to that. Actually, that's crap. There is absolutely a price to that because I'm still upset about my homeowners insurance and I have no peace of mind. But it is peace of mind. And so you don't pay for insurance. If we all knew when something bad was going to happen, then yes, we'd be like, ooh, I know I'm going to be in a car accident March 12th.
Correct.
I would like to sign up for insurance on March 11th.
Correct.
Awesome. But that's not how it works. It's for the what if, not for the what's known.
That's correct. Because if it's known, it's probably not going to pay for it anyway.
It's probably not going to pay for it, right?
Yeah.
So, or at some point in North Texas, you're going to get hit by hail
Mhm.
at some point. And just because you haven't necessarily made the claim doesn't mean you haven't gotten hit by hail, by the way. So those are two separate things. And then that's a myth in and of itself.
Yeah, and specifically North Texas with the hail.
Correct.
Specifically. Yeah.
In the Houston area, if you haven't been affected by a flood at some point, whether you're in a flood zone or not, there's a really good chance you will within a 30-year time frame, right? If you stayed in one location. So I would argue, I mean, yes, I understand what you're saying when you say, yes, that's correct. If you never use it, it's a waste of money. But the other part of that to me is if you have the peace of mind where you know, hey, I can budget for $2,000-$3,000 a year to make sure that my home is protected and my family has a place to live.
Mhm.
That's worth it. I will do that all day.
I agree.
I will do that all day.
And I am answering that, yeah, you are correct. It is a waste of money if you never use it. The thing is, you don't know if you're ever going to use it.
And
So,
that's,
I watch, I'm on Facebook all the time, as you know. And because I sends you funny stuff all the time, which you
Fair.
never watch.
Yeah.
But anyway.
Well, I do watch. I just can't react to all of it.
Oh, okay.
I
All right.
work, sir.
Yeah,
I don't
right.
know what's happening.
Right. So, some of the things that I have found, and we may start posting them on our Facebook site from time to time, is like, okay, so let's say you're driving down a highway and you go under an overpass. This was a real video. You go under an overpass and a big truck carrying logs misses its turn and comes flying. They miss the overpass and come flying down the embankment.
Yeah.
And all those logs hit you.
It's a bad day.
It's a bad day.
It's a bad day.
You don't know. You didn't do anything.
You did nothing.
You were just
wrong.
driving along, minding your own business. All of a sudden, you're either, and I'm going to say it, you're either dead
Yeah.
or severely injured. And then you're wondering, well, do I have health insurance? Do I have life insurance? What about my vehicle? Things like that.
Or yeah, at the very least, the vehicle is totaled.
Well, the argument is,
Right.
well, wouldn't it be the trucker's fault? Yes, it's the trucker's fault.
Assuming they have coverage that's adequate.
Assuming they have coverage.
And then assuming it's adequate, because
Yes.
if they have multiple logs falling off, how many other people did they damage? And then
Correct.
how many other lawsuits are getting filed against them? And then how many other things? And then how many?
Correct.
So it's up to us as individuals, as responsible adults, to make sure that we can do everything we possibly can to control a situation, right? Which is, if that log driver person,
Mhm.
company, thing doesn't have adequate coverage because there are deaths and there is excessive property damage, then that's when your homeowners or your auto insurance will kick in the uninsured, underinsured,
Correct.
and then pay for everything as though you were the third party, right?
Yeah.
As a third party insurance. So, okay.
I actually had, speaking of, just real quick, because you're talking about, is there enough insurance? So I had a client call
There's never enough insurance.
a few weeks ago, and they're like, we were the second car in a 3-car pile up. Somebody behind us hit that person, which hit us, which then hit blah, blah, blah. And which I hit the person in front of me. And they're like, what do we do? I'm like, while you're there, you call the person's fault it was, you call their insurance company and you make the claim. They're like, well, why? I'm like, because you want to be first on the list.
Fair.
Because they only have so much insurance who hit you. And if there's not enough there by the time they get to your claim, you may not get anything from their insurance.
True. But at the very least,
Because they're going to write a check and be done.
true. At the very least, though, they would at least be able to fall back if they had a good agent, which they do because they're calling you.
Correct.
They would at least have enough
The
coverage.
uninsured, underinsured would help.
Absolutely.
Yes.
Yes. So,
But then you're making the downside, you're making a claim against your own insurance company.
well, you are, but at the
In-
same, but it is weighted differently.
Yeah.
It is definitely weighted
No.
differently than saying I caused the 3-car pile up,
Well,
because then they're only
I
paying for
agree.
your stuff. And it's like, well, yeah, they're
But-
matching it against the fact that there are all these and really, I would say more so in our area. And I think there are a lot of uninsured, but I think our biggest issue in the Dallas-Fort Worth area, specifically underinsured. It's not about you encountered somebody who doesn't have insurance. You encountered somebody who didn't have enough. If you're driving,
Well, okay.
that would be my opinion.
So let me give you the statistic on that. In the state of Texas, 26% of the people on the road do not have insurance. So think about every 4th car that you pass.
That's in the state of Texas, though.
That's in the state of Texas. We
Houston
are in
sucks.
Texas.
I think they're all in Houston.
Well, it could be,
I'm just
or
I got nothing. I have no data to support that.
So 26% of the people in Texas do not have insurance. So every 4th car, just think every 4th car does not have insurance. So you need insurance, even if you never do anything wrong, but you could get hit. And then now you got to play the, oh crap game. What am I going to do? And kind of go from there. So yes, so going back to the question, or going back to the myth, insurance is of no value if I pay for it and never use it.
Myth.
It is a myth. It will give you peace of mind in the event that you do have a claim. And one of the things I tell people is like, look, they're called accidents for a reason. They're not called on purposes, right? They're called accident. You don't know when it's going to happen.
Right.
You don't know when it's going to happen. You could have somebody just swerve over for no reason. I've had that happen before. It's like,
and can we just comment for a second on how many people drive while jacking around with their phones?
Yes. No.
A lot. No, they
Yeah.
don't.
No.
No, everyone's a really good driver.
I do.
Yeah. Oh, I will say like that. I don't.
Yeah.
So when Brian and I were dating, he got in 2 car accidents, literally a month apart. And I was like, all right, dude, you're done with your phone. I'm done. And especially once we then were getting married and then we're having children, I was like, you cannot, that's a rule. The rule has to be you can't mess with your phone while you're driving. Because we can't be in an accident with our freaking children. And he was totally fine.
Yeah,
Weren't you good with that?
I get it.
Speak.
Yes.
Thank you. So, and then I will, if I get to a stoplight and if my phone's accessible or whatever, and if I need to look at like blah, 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 that's fine. We have enough Bluetooth. We have enough hands-free. We have enough things where you don't need to be on your phone when you drive for the most part. But, and I'll call my husband every Sunday night. I come home from my basketball games, which are an hour away. And I call him when I get in the car as I'm walking to the car because it's dark. And then I'm like, oh my God. And it's Dallas, Plano, all the things. I'm like, it is crazy, the ridiculous drivers. And I'm like, oh, there they are. They're on their phone again. And it's just, get off your phones.
Makes you happy you got good insurance, right?
Yeah.
The myth is busted. You need insurance, even if you never use it, because it's a peace of mind. That's the correct.
And I will say this, just one.
One
counter. I'm so sorry, but if you're like, oh my God, I have so many assets, and then it protects your assets as well.
That's a
completely different conversation.
Correct.
But either way, for what, $200 a month, you can't protect your millions of assets. Okay, go.
Yes.
Next.
Right. Yeah. So myth busted, right? And so this kind of actually, like some of what you guys were talking about, leads into this next myth. That's
Love
why
that.
I was trying to get you guys.
Sorry.
So another myth here is the cheapest policy is always the best. The risk of underinsuring yourself.
Okay, so we have so much to say about that. So we're probably not going to say a lot about that. So let's just
conversations I have every day with clients.
Yes. And so I think, so the one thing that I will say that's nice about my portion of it, because like health insurance versus, again, for those of you who don't know, I do mainly the health insurance and life and all of those things. And then Dennis is more commercial, P&C, home and auto, things like that. My total exposure is given in the policy, right? Like you get my health insurance policy and you know what the premium is and then you know what your max out of pocket is. Mm-hmm. You may not like it and it may suck.
But you know it.
But you know what it is. With yours, it's not that simple. No. With home and auto, it's not that simple. If you underinsure on auto, you could be personally liable because you just screwed up a surgeon, a world-class surgeon who makes $3 million a year and now can't use his hand anymore. And he was in the prime of his career, but you messed it. Like, that's a problem. Yeah. There is no limit to the exposure, and where mine there is. Like, it can still be a lot and unbearable and all of the things, but it is different.
Yeah. So with auto, that's certainly correct. If you hit somebody that
home is different,
makes a lot of money, then you don't have enough insurance, then you could be in a pickle. Homeowners, the homeowner's side is if you don't insure your home for enough, and let's say you have a fire, it burns it down. Now you've got to make a decision which part of your house you do not want to rebuild, right? Also, there's something called the 80% rule. Do you remember that from
I
your?
do. You have to insure at least 80%
in order to get replacement
costs.
So
absolutely.
let's say that
Mama's been out of the game, but not that long.
All right.
Baby.
So let's say you got a $500,000 house. It takes $500,000 to rebuild it. You've got an 80% co-insurance clause that says, hey, you've got to insure it for at least $400,000. You don't insure it for $400,000. You only insure it for $300,000 because you're trying to save some money on your insurance. Now, all of a sudden, you have a complete loss on the home. The most the insurance is going to pay is whatever that dwelling limit was. They're not going to replace.
In this example, it's $300,000.
In this example, it's $300,000. Now, if you have a claim that is not a complete loss, the adjuster then can come back and go, oh, okay, well, you only insured it for $300,000. You should have insured it for $400,000. Whatever the 300 divided by 400, whatever that's
75%.
75%. We're only going to pay you 75% of your $300,000
of your loss, essentially.
Of the loss. Of the loss.
So if it's $150,000,
they're only going to pay you 75% of it, which
correct.
is
well, that's a terrible example. So $200,000 loss. Sorry, yeah. 150 is a
We're
terrible.
We're trying to make it easy.
I know. Right. So they only pay $150 out of the $200,000 loss.
So you got a $50,000 gap.
By the way, plus
the deductible.
Your deductible.
Plus your deductible.
Yeah. So they just keep on throwing those punches, baby.
So we run into that. There are agents out there that write homes way underinsured so that they can get the business.
Premium.
We try not to do that. There are industry calculators that show you how much the insurance should be. We use those calculators, and we know that in our area or certain areas, we're looking at anywhere from $175 a square foot to rebuild a house to $250 on a regular home. If it's a really nice home with, granite countertops and hardwood floors, and it may be closer to $275, $300 a square foot, which is different than when I first started back in the late 2000s when it was $60 a square foot.
I was going to say, even when I started though, it was barely over 100. You just weren't. It just wasn't what it is today.
So what'll happen is
COVID happened.
COVID happened, but not only that,
for building materials.
One of the things that people don't understand, and I'm going to explain this as best I can, is that let's say you buy a brand new home built by David Weekley. Weekley Homes is nationwide, so a lot of people know David Weekley Homes, and they sell you that home for $300,000. Well, it may have only cost them $200,000 to build it. So you're thinking, well, $300,000 is enough. No, because if that house were to burn down the day after you bought it, the very next day, David Weekley is not going to rebuild that home. You have to get a custom home builder,
right?
Which is going to be another 50% cost at least.
Because you're not doing the bulk buy, they're not doing the massive,
you don't have your
the
own
neighborhood
plumbers.
Situation.
Exactly.
Yeah, everything is pieced together, and you now are working in a very restricted area, opposed to we have this blank open lot and everyone can just do and go and do. But now you've got the neighbors and the things.
If you got a plumber and you're David Weekley and you subcontract to a plumber, the plumber comes out and goes, oh, the house you want me to work on is not quite ready for me yet. I'm going to go work on this one. Or this one or this one. But whenever it's a custom home builder, they came out just for your home. Your home's not ready yet. Well, they're going to charge a trip charge and whatever else they're going to charge. And so your price just goes up. Your cost goes up. So anyway, so that would be another myth. Cheaper is better is not correct, because you will end up with coverages that you need that you don't have.
You're going to pay for it one way or another.
You'll pay more
if the loss happens. You will pay for it one way or another. And yes, and then in that situation, 99 out of 100 times, you're going to end up paying more.
Correct.
Go ahead.
Wow, that was wild.
Jeez.
It's insurance gone wild.
I know, but he said it in his monotone, chony voice.
I don't know if he was really
fantastic.
I don't know if he was really wowed or he was like,
he was not wowed.
I can't believe y'all did.
He lives with me. No, he lives with. We talk insurance all the time, and that's I feel like foreplay. Go ahead.
So last general insurance myth, and then we'll get into more specific myths here. But filing a claim will always increase your premiums. When is this true and when is it not?
Every time it's true.
Not necessarily on homeowners.
I disagree.
No.
I disagree again.
Not from what we see.
So
because you don't do homeowners.
Okay, but when I did,
I'm picking on you.
I know. I don't have a problem with that. Here's the thing. It will affect you, and it has affected, and it may not be significant, but it does affect.
It will affect you, but not necessarily on the well, let me back up. Let me go.
Oh, wait, you're about to say that I'm right.
No.
Say it.
I'm not going to say you're right.
Say it.
Because I don't agree that filing a homeowner's claim automatically gives you an increase. What it does do is that it may keep you, if you decide you want to switch to another company, you may not be able to because many companies don't want somebody that's had a claim. So therefore, when your rate goes up and you can get it over here for $2,000 less, you're kind of stuck where you are. So,
but then if my insurance rate didn't go up, I wouldn't be looking to switch.
Well, here's the other thing that insurance rates are going up regardless.
Okay, so
but if they were to stay level,
I would say again, and I'm going to use the time frame of pre-COVID.
See how confusing this is? We're two insurance agents and we're disagreeing on it.
Yeah, and that is so. But when I would run, because for homeowners specifically,
mm-hmm.
and even auto, we run reports before it can be bound.
Mm-hmm.
And an official policy,
mm-hmm.
we give a quote, and then we have to actually run reports, and that costs us money as an agency. Mm-hmm. It costs us money to run these reports. So we don't run them just every time we quote someone, right? Mm-hmm. It's like, hey, tell us, we're trusting you to tell us our things and da-da-da.
But we have to run it before we can bind.
But we have to run it before and then so we run it, and then all of a sudden it's like, bing, hey, that's my dog. She's an idiot. I love her. But bing, you had a claim. Oh, it was a $0 payout. So it adjusts the premium. And then I have to call the client and say, I'm so sorry. Did you make a water claim back 2 years ago? And they're like, well, no. I don't know what you're talking about. I'm like, well, it looks like a water claim around this time.
I called the insurance company, sent somebody out, but it wasn't anything.
They didn't even send anyone out. They just asked for a recommendation of what contractor to use for a new water heater because that was in the garage.
They called the 800 number.
They called the 800 number. But my point is nothing was paid out. Nothing was even handled. Mm-hmm. And yes, the premium went up. So I would say,
I don't see that much.
Oh, I saw it all the time.
Yeah, but
and now everything just goes up. So what I will say though,
everything's just going up regardless now.
Is if you make a claim, let's say for a roof in the Dallas-Fort Worth area, that is the only time that I would actually see where, and this was years ago, you would make the claim, get a brand new roof, and your premium would actually be cheaper. You've made because you now have a brand new roof, so you get this healthy new roof discount. Mm-hmm. That actually makes it cheaper than before.
Yeah.
But that doesn't even happen anymore.
No.
As far as cheaper. It doesn't go cheaper.
It still goes down. No, it still goes down.
It goes down from the massive increase, but it doesn't go cheaper than what you had it before.
Yeah, it's like getting a coupon for eggs. I mean, it goes down, but it's not a seed.
$6 today. We bought eggs for $6.
Yeah, somebody told me it was $7 I saw online the other day. So,
yeah. Anyway, it's up again.
We have chickens, so
we're
have
having
eggs.
we're eating steak.
I don't blame you.
It's cheaper. It's cheaper than eggs.
But anyway, auto for sure. If you make a claim, doesn't matter what it is, it's going up.
Mm-hmm. Windshield claim.
It doesn't matter.
Folks, like get AAA or something and then make the windshield claim on that.
Yeah. If you need a tow or whatever it is,
AAA.
They're looking for any reason they can. If you have AAA, it will not show up on your report.
Right.
At least I've not seen it show up on a report.
So it'll save you money in the long run.
Yeah. So get AAA.
Yep.
We do not do AAA, but it's still a good program. Are any of the, let me take this, are any of the company or any of the programs out there good for roadside service? They're all about the same.
Yeah.
Both have their people love them. They both have people hate them.
Yeah.
So just pick one and go with it.
But that's what I would say would be, that would be a little bit of a workaround for when something like that happens. And AAA, they've been doing a great job actually advertising recently. And I'm like, oh, they'll come jumpstart your car. Cool. And they're like, one jumpstart service will pay for the whole thing. And I'm like, okie dokie.
Good.
So truly do that. It covers all the cars. Get your thing.
Yep.
Okay, next myth.
So this one is more health insurance based.
Love that.
And it says health insurance covers everything. Breakdown deductibles, copays, and exclusions.
Wow. That's a lot.
That's quite a myth.
It's a pretty loaded question. So, what I will say with health insurance is they have, typically speaking, with most of true health insurance, it does. Not that it pays for everything, but it encompasses a whole heck of a lot. Where I always say with auto insurance, like, your oil change isn't covered because that's a maintenance. That's part of maintenance. Like, your insurance is not there to maintain your vehicle. Where insurance, since 2015 officially, but 2014 when it was implemented, they pay 100% of your preventative treatment. So but there's a part to that where they're trying to catch early detection, right? So they're trying to incentivize, hey, people get in there, get tested, let us know what's going on. And then early detection really just can decrease medical cost overall.
Let me ask you a question and go on with that. Because so many companies, if you're on group plan or individuals, it's almost like auto insurance where people change every time a renewal comes up. Is that correct? Not correct?
So I would say on the individual market, yes, because the market changes so drastically. And the plans change. So every year they have to hedge and they have to say before, like, hey, this is what our plan is going to be. And they have to try to guess what their losses are going to be for the next year.
So where's the incentive for the health insurance company? Where's the incentive for the health insurance company to pay for preventative stuff if there's a 70% chance they're not even going to be the insurer after the policy period's over with? I'm stumping the chump again.
Yeah,
do they get government money for that? Is that part of the Obamacare law, what is it?
So the preventative is absolutely part of the Obamacare. That's the ACA. The ACA, right. 2014, whatever the act is, but the Affordable Care Act, absolutely 100% of preventative care being covered is part of the ACA.
Because on my side, if they owe it, they owe it. They just, they pay it.
So
they pay it and move on.
The incentive is if everyone's switching anyway, then you should at least know hopefully what you're going to be getting into, right? Mm-hmm. And then at the same time, if it happens under your watch, you would rather, I want somebody to find out in February that, hey, we've got some precancerous cells, we've got some weirdness going on in this blood work, and then we can nip it in the bud real quick. Mm-hmm. Maybe with a quick treatment or a quick whatever, maybe a surgery, opposed to, wow, it's been festering for 5 years and you didn't think you had the financial means to go get looked at. Mm-hmm. So now we have a 6-month hospital stay, and now the insurance company is on the hook for millions and millions of dollars with the hospital, opposed to, hey, we could have done this quick $30,000 surgery.
Okay, that's fair. I didn't know. I've always wondered, what is their incentive to do it?
That's
because the way things are set up now, it doesn't.
Yeah, and it's the same thing. Like, that's why, Mint Dentistry actually does a fantastic job at painting the picture, but they were like, insurance companies wouldn't give you free exams if it didn't benefit them. And that's true, right? Now, I will say also, just side note, what a lot of people don't realize, your free annual exam with your dental insurance,
it's built into your premium.
It's built into your benefit max, your max benefit. So if you have a max benefit of $1,500, when you go and, typically speaking, and it depends on the policy, I guess, but those 2 annual exams built in there,
they apply toward deductible.
It's taking from the $1,500.
Oh, okay.
So you don't have $1,500 for your cavities and your root canal. You have less, whatever the X-ray and the annual.
That's
and
not
the whatever.
deductible. That's actual.
No. It's not a deductible because with dental,
The 1,500
it's
is not.
different.
Okay,
It's
we're
a
talking
max
about dental.
benefit.
Oh, you switched on me. Went
I know
from
I
health
did.
to the
Yeah,
dental.
yeah, I did.
So in dental, if you get a $1,500
just-
max benefit,
It's a max benefit. That's all the insurance company.
anything that you do with the dentist comes out of that 15. Well,
Yeah.
if it qualifies, anything you do with the dentist
Yes.
comes out of that 1,500.
Yes.
But if it's a deductible, let's say we're healthcare and they pay for routine exams,
That
doesn't come out of your deductible.
No, because the only thing they care about is what for health insurance. And I went to dental just because a local, and I think they're like statewide now or whatever, but they just painted the picture really well where they're like, they go on their commercials and they're like, hey, an insurance company is not going to pay for a preventative treatment if it doesn't benefit them.
Mm-hmm.
So that was going back to your initial question.
Okay.
But to answer this question, the max out of pocket for health insurance, they only care about what you as the member pays.
Okay.
They don't care about what the insurance pays. You pay your responsibility, and then once you hit that max out of pocket, then the insurance company will pay 100% from there. And there are lots of rules and things in between, and there's too much.
I'm
to go
glad you
over
do
that.
health insurance.
Yeah, wow.
We've talked about that. It makes me
I drink
angry.
a lot. Go ahead.
It makes me angry. Like a lot of people, it probably makes them angry.
Absolutely.
But
All right, so one more Steph-specific health
Uh-oh.
insurance myth, and then we'll get on to more of a commercial thing here.
Ooh.
Employer-provided insurance is always enough when you might need additional coverage.
is it asking when you might need
That's
or?
just
Okay, it's a little nugget thrown. Okay, so I would say, what is it about the way I speak that throws these
just get some
damn dogs out or throws them off? But employer coverage, because they were not specific to any type of coverage, it may very well be adequate. And it may very well have its holes. So with health insurance, you don't really double dip. You don't necessarily want 13 different policies because then you're paying for the premiums and all the things. But when it comes to life insurance with employer sponsored, hey, if your company is giving you free life insurance or very cheap life insurance, 100% take it. However, you are completely out of control on that. They can stop it at any time. It can go up. The policy can change. The rules can change. Every single thing can change. So with life insurance, get the freebies.
Correct.
But get in control of your own thing as well.
Yeah, and that's one of the things I tell people. I'm kind of looking at the camera because I know there's going to be some folks watching this. If you have life insurance provided by your employer, take it.
Take it.
But do not rely on it. Get your own policy because like what she just said, it can be taken away because it's a benefit. It's not a policy. It is a policy, but it's not your policy. It belongs to the company. They're giving you a benefit out of it. They can take that away the next year. I cannot.
Or it can change carriers too.
Yeah, yes.
Truly just by changing carriers, or maybe there was an adjustment if you work for a smaller company, and I'm sorry to cut you off, but there are different rules of what guaranteed insurability happens versus non-guaranteed. You have to hit a certain number of people for a certain level of guaranteed insurability.
Correct.
There are so many factors that lie outside of your control. Control it and get your own.
Yeah. And the thing is, insurance companies, like if you have your own policy, will only allow you to buy so much. So if you make $50,000 a year, they're not going to let you buy $10 million worth of coverage. They're going to go, what? So they look at multiples of your salary. If you have employer life insurance, that is not counted in that multiple. So maybe you can still get 10 times your annual or 12 times your annual income, but they don't count what you're getting from your employer. It's what you are standing at on your own. Plus, if you switch employers, there's no guarantee that you're going to get an employer that offers life insurance. They may offer everything but life insurance. So I'm going to tell you folks, I have sat across the desk from people in their 60s who are retired, and now they need life insurance, and the stuff is so expensive they cannot afford it. So get life insurance now. No matter how old you are, get it now. It is so important, and you lock the rate in. Even if it's a term policy, you're going to lock the rate in for X number of years. It is, of all the insurance that we help people with, life insurance is the most important, I think, that we can help people with. I think it's the most important.
It is the most impactful when something terrible happens.
Yep.
It is the most impactful.
And when I was a young agent, the company that you and I were both with used to tell me things, and I thought, they're just blowing smoke. But as I've gotten older and sold more life policies and talked to people, I understand where they're coming from with this, is that there is nothing else that you can do to leave. Let me back up. That's not correct. I'm trying to figure out how to say this. If you buy a life insurance policy for your family or your spouse or your kids or whatever, there's very few things like that you can do that shows them how much you loved them and cared about them. That you were willing to sacrifice a payment now on life insurance so that they have something after you're gone. Whenever your income is gone, they are still taken care of.
It's the ultimate selfless act because you are the one who will never reap the benefit.
You don't get any.
Typically speaking, there are policies out there. Absolutely, they have living death benefits and all the things, but
that's a whole other story.
Yeah. There's a lot to be said for that, and if you can't tell, he's very passionate about that. That is something that we both are very passionate about. Life, it's game changing. It's game changing for the ones who are left behind.
It's life changing for the ones because they already went through a major life change. You're no longer around. Now what am I going to do to pay for all the house and the kids and everything else if you have that? Going along, and we talked about this, and we're talking about myths. One of the big myths is I'm single, I don't need life insurance.
Well, yeah.
Absolutely incorrect. Absolutely incorrect.
Single,
you may have parents that you end up having to support later on. If something happens to you, you're not, you won't be there to help them with the money. You may end up getting married later. You could go to the doctor today and find out, or tomorrow and find out you don't qualify for life insurance, and you find out later in life that you need it.
Yeah.
So
we talk about that. I always say you're one doctor's appointment away from being uninsurable.
Yeah. So single people need life insurance too.
So, okay.
They may not need as much, but they need some.
So let's go. We'll go one more myth, and then we'll.
Do we got one more myth?
Maybe we'll spin the wheel. Let's see what happens.
There we go. One more myth here.
Let's go commercial.
This one's more geared towards commercial.
I don't know anything about that.
Small businesses don't need insurance. Why even a sole proprietor or startup needs protection? That
is a lie straight from hell. So I would just tell you, straight from hell. Yeah, they need insurance. If nothing else, even if they've been doing something for 10 years and they decide to open up their own shop, they are going to miss stuff because what they're good at is what they're good at.
Right.
And I think the thing that people don't understand, and folks, I do mostly commercial. This is sort of my area of expertise. We haven't talked about it a lot so far, but we will in another episode. But commercial insurance is so important because that is protecting your livelihood. That's how you make money. If you're in business for yourself, you make money that way. You want to protect that because if something happens, even if you weren't involved with it, for instance, let's use a home. That's the thing that comes to my head. You put the fence up. Well, there's a claim on the home against the general contractor. Well, guess who gets sued? Everybody gets sued. Now, I'm
here to attest from a claims background.
Mm-hmm.
if something bad happens, every single person who is involved in the process gets named.
Whether they were involved in that specific thing that happened, it doesn't matter.
If you touched the bottle that carried the poison, it doesn't matter for how long and what capacity, you will get named. So that's 100% true.
So
we've been there.
The thing is that let's say the electrician does something that causes the house burn down. You get a lawyer. Somebody gets a lawyer. They sue the electrician, the plumber, the general contractor that built the house. They do the yard people. They're suing the yard people. They're suing the fence people. They're suing everybody. Now, if you don't have insurance and you get that subpoena or whatever it is, you get the subpoena, you have to hire a lawyer to write a letter that says, hey, this doesn't really apply to my client because all they did was put the fence up. Well, the other lawyer that's doing the suing could look at that and go, okay, yeah, you're right. They're not really having anything to do with this. We'll leave them alone, move on. Or they could go, you know what? We're going to keep pushing this.
What can we get out of it?
Because lawyers, and I know lawyers that are on the side of suing, they will tell you, they've told me, we follow the money trail. That's what we do. We follow the money trail. So wherever they think that there's some money, they're going to sue. And what do they do at the beginning of a lawsuit? Is they sue everybody. It's the old adage of we throw it up against the wall and see what sticks. Yeah. And if you don't have insurance, it's going to cost you money to defend yourself just through that process. So get the insurance. I don't care if you've been doing something for 50 years. We live in a different culture than we did even 5 years ago, where everybody is litigious these days. Just protect yourself and your income.
It would cost us $2,500. This is like 15 years ago. $2,500 minimum once we had to get an attorney, legal representation. And we had a deal because we were a big ass company. And so for you as a peon, and that's what we would all be at that point, is just a peon.
Oh, yeah, you're just an individual.
And then, by the way, try to find an attorney to timely respond to your inquiry when, by the way, you're put up against a clock. If you are getting sued and you're named in a lawsuit, you are put up against a clock, and you have to, at that point, find anybody who's willing, number one, to even call you back. Because we've been in situations where, I mean, if you're in business long enough, then somebody is going, it's just a part of it, and it's fine. What is happening with my voice? I don't know, but they're fine. But so to your point, it's, again, full circle, you're going to pay for it somehow. You're going to pay for it now, or you're going to pay for it later. And if you got to pay for it later, it certainly it will most likely be
cheaper
a whole
to pay
lot
for. Yeah, and pay for it now. Yeah, and that's the thing about insurance. When it's written correctly, it will protect you. You will pay for it now, but is it cheaper to pay $200 or $300 a month now, or worry about getting a $50,000 bill later that you got to pay all at once?
And if you're like, and that's if you're not liable.
Oh, well, we'll just file bankruptcy.
No,
doesn't really work like that.
So
that's something different. Yeah.
So instead of spinning the wheel, I don't know. It's just such a sad story. I don't know if I necessarily want to tell it because I don't want to bum people out, but it just truly, from my past experience with claims, we had where, and we could edit this out if we think it's too sad, but a young child died because they ingested the tiki torch fluid. So the father had taken the tiki torch refill fluid and put it in cups, just like whether styrofoam or, like the red Solo cups or whatever, and put it outside, and then was going around the different torches and was filling it up. So because we insured the store who sold
you got sued.
Bottle, we got named in the lawsuit. Now, it was a very easy out for us.
Correct.
But again, we have attorneys, not on staff, but attorneys that we hire in different jurisdictions and all the things. And so it was like, hey, here's our letter and this is our denial, da, 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 da. But I'm to every single person, company, anything, whoever touched that bottle from manufacturing to delivering to set to anything got named in that lawsuit. And ultimately it was just a terribly, terribly tragic situation. And it doesn't matter if anybody is liable at all, because at this point you have a young 2-year-old child who is no longer with us. And you're telling me if you go to court, some jury's not going to shell out something?
A good lawyer is going to get something out of somebody.
Something out of somebody needed to be accountable.
Whether they should or should not have.
It doesn't make it right or wrong.
Doesn't make it right or wrong.
Tragic.
Correct.
That is the way it works. So if you are in business with yourself or for yourself, but in business, and you're like, I don't make anything. I don't do anything. All I do is sell something. Everybody doesn't matter. It doesn't matter. You have to protect yourself. I mean, it's just awful. It's awful.
Yeah.
But
you could be a home, you could be a decorator and the house catches on fire and they're going to try to sue you to say
curtains were too close to the whatever, right? Like, doesn't matter.
They didn't tell me
your picture frame.
They didn't tell me I couldn't put a electric heater next to those curtains, that they weren't flame retardant. So therefore, I'm going to sue you. Yeah. I mean,
it doesn't. Liability has nothing to do with suability. Right?
True.
So. Period. Just know that. So liability has nothing to do with suability. You can get sued. Liable, not liable. Well, you can do nothing wrong.
I tell people lawsuits have nothing to do with guilt or innocence.
Well, it's the same thing, right?
Yeah. That's an easier way to say it. That's what I was getting at. Come on.
Well, I was rhyming.
I know.
Suability and liability. Is suability a word? Nobody knows what it is today.
Probably. We'll have to ask somebody that does Scrabble. But no, it doesn't matter if you are guilty or not. You can still be sued.
And then you have to defend yourself.
And you have to defend yourself. If you have insurance,
answer the lawsuit.
It'll defend you. Yep. In 99% of the cases, there are cases where it won't, but we won't get into that. But that goes back
to that cheaper policy crap.
It could be the cheaper policy. It may just be the way to policy. You do the premises only liability, then you could get into some stuff, but I won't get into that too deep right now. That's a whole nother conversation.
That's good because we're running out of time.
Yeah, we're running out of time. We got anything else?
No, I think
Is that it?
We're over.
Commercial insurance is a whole different animal than home and auto. That's the reason why we haven't really focused too much on it so far, because we're trying to help people understand some of the basics first, but eventually I think we'll maybe in the next few episodes that we release, we'll talk a little bit about commercial, but it's such
so
a
vast.
I was getting ready to use that same word. It's such a vast subject, and there are so many ins and outs to it, exclusions, endorsements, things like that, it is not a home and auto policy. It's even commercial auto is not like personal auto. Because you have all these different symbols, which tells you what kind of vehicles it covers and doesn't cover, and what they're used for and what they're not used for.
I love that. We'll wrap this one up though.
Yeah,
in that way, just for the home and auto people.
That's a teaser. What is commercial auto symbols? So anyway, all right. Well, I think we're about done. For the day. You've kind of mentioned it 2 or 3 times, so I think we're going to be quiet. Yeah.
Okay.
So
can you stop talking?
We need to wrap it up. But anyway, thank y'all.
You did well. I love it.
Yeah, thank y'all for joining us for another episode of Insurance Gone Wild. We look forward to meeting with y'all again here in the near future. And if you have questions or comments, please feel free to reach out to us. Contact at igwpodcast.com. Contact at igwpodcast.com, or you can call us at 817-753-0093.
Also, like and subscribe.
Like and subscribe our YouTube channel. Yes.
We need some likes, baby.
That's right.
Popularity contest.
That's right.